Hi, I'm Richard Vague with Tycos. This week, since we have a new inflation number for July and the chance of lower rates based on lower inflation has been on everybody's mind, we're going to quickly dig into that subject. The latest CPI report shows a year-over-year increase of 2.9%. The first time in a while that number's been under 3. And that's favorable and was well received by the markets, but it was actually a better number than you might think. When you hear the phrase 2.9% inflation, that is the year-over-year change of prices represented by the CPI index from July of 2023 to July of 2024, and for the most part, that is how inflation is read and expressed. But if we want to understand what's happening right now, the more insightful metric is the absolute most recent change, the change to July from the prior month of June, which we refer to as the month-to-month or linked month inflation rate. For July, it was just 0.12%. If you annualize that by multiplying it by 12, it comes out to an ultra-low 1.39%. That's a number well below the Fed's target of 2%. But perhaps that number was a seasonal fluke. July often brings better inflation numbers than other months, so we need to contextualize this data. When we look back at the last 5 Julys, we see that all but one had higher inflation numbers than this year's 0.12%. The only exception? July 2022, the very month when inflation fever finally broke and the rate collapsed. It had been 9 the immediate prior month, and it just fell through the floor in July of 2022. So at 0.12%, this July's number was low even for this time of year. The good news wasn't isolated to the CPI. It came with the PPI, Producer Price Index, as well. For July 2024, the PPI year-over-year increase was 2.2%, almost all the way down to the Fed's 2% target. But when we look at the change from June to July, the month-over-month change, it was even better, a mere 0.03%, or 0.37% annualized. That's effectively zero. And happily, just like with CPI, if we look at the last 5 Julys, we see that all the prior values were higher except the pivotal month of July 2022, the very month inflation broke, with a linked month decline in July of 2022 of 0.38%. So the July number was terrific for this time of year. Let's consider one more index, the Personal Consumption Expenditure, or PCE price index, specifically the Core PCE, which won't be available for another 2 weeks. The Core PCE is the Fed's preferred measure of consumer prices, as it includes a broader range of household goods and services and is quicker to capture price shifts while excluding food and energy prices. Early estimates from the Cleveland's Fed's nowcasting report forecast July's inflation at 2.64% year-over-year, 0.13% month-to-month, or 1.56% annualized. In June, the month-to-month increase was just 0.08% or 0.9% annualized. So a great number on the PCE front as well. But note that we may very well and often do get a less favorable linked month number. Next month could be higher or what have you. But most have, and we believe most will continue to be good. As we have said before, the big risk to this is war risk, since escalation in Ukraine or Gaza could send oil prices much higher. So we'll have to wait and see what the good people at the Fed now do with rates. But as we've maintained for a while, the inflation panic is over. That's it for this week. Thanks for watching, and as always, keep the conversation going in the comments below. Thanks.